We are here, we are here, we are here. On this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up AUD, NZD. We are on the 12-month time frame. Price action, last candle to the right-hand side is a bearish red candle. Spike up to the high. So it's like a doji style candle. So it's a weak candle coming from an area at a high. So we got to figure out what's happening in that area. Current price is sitting at 1.05853. If price action pushes down, it can tag that low area of the solid red and green touches towards the bodies of those candles, and that will be nearing the numbers of 1.03581. If price action works its way up, it can tag that highest green and red of structure at 1.72740, or market can tag that midpoint, which would be near the numbers of 1.38465. And we're going to also add second level lows. So let's take a look at what's going on in the market. So if price action pushes up, where is it coming from? So we're looking for the multiple touches for that green and red solid touches to the bottom, which will be this area here. So if price pushes up further, where is it coming from? So when the market came from that high and did a complete touch with red and green, it created that first leg, second leg, third leg, fourth leg, retest. Market pushed up once, retest, market pushed up twice, and that's what the second last can do. And now we had a retest again. So if it's retesting currently, so that's all together 1, 2, 3, 4. This is the fifth touch. And if it pushes up out of that area, market's coming from a quadruple bottom and a retest, or overall 5 pushes to that bottom. So if price action pushes down from this area, where is it coming from? So we'll go back from where the price action started at when it tagged the high, and we're still looking for that market when it entered the midpoint after it broke it. So once the market broke the midpoint, it came back to retest. So that retest is the first leg. So let's see how many touches we have so we can figure out where price is currently coming from. So we do have that overall first, second, third, fourth, retest, market's pushed down. So market's coming from a double top and a retest, a triple top, and we have multiple retests. So we're going to count up the retests, see if that market, if it drops down, how many retests did it take for that market to break through. So when that market broke into that area and we had that retest with that green candle, that will consider the first leg. So we have that first leg, second leg, third leg, fourth leg, retest, one, retest, that's what the second last can do. And if the market pushes out, that'll be the third push. So altogether we have 1, 2, 3, 4 pushes to that top, which will be identified as a triple top and a retest, or a quadruple top. So now when we read the overall market, where's markets coming from? Market coming from a triple top and a quadruple retest, and we can receive that break of that market, and that market work its way down. Or the market can consolidate with the last few candles in the market. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles in the market from the beginning on in. That's consolidation. So we're waiting for that market to break out of a pattern to the upside, downside, or we can receive patterns or candles within side by side within each other within this area, which would be consolidation. So all we waiting for is the breakout to the top side or the bottom side. Walking down to the 6-month time frame, so price action on the 6-month time frame is reading as a bearish red candle. So price action, bearish red candle, second last candle, price action bearish candle back up to the high. So it's retesting second last candle, third last candle's area. Second last candle's a spike up to the high. Could be a retest from that previous pattern. So we already know when we was on a 12-month time frame, this area considered a quadruple top. Now on this time frame, it looks like more of a, so if we add that midpoint here and the market broke into that area and it came back to retest, what did we receive? The first, second, third, fourth, retest 1, retest 2. And after that, see if that market breaks out. So it's still reading as a triple, quadruple top, or a triple top and a retest. Working our way to the 3-month time frame. So price action 3-month time frame is a bearish red candle spike up to the high. So price action candle is retesting the midpoint of the second last candle. Second last candle is retesting the midpoint of the third last candle. So we having a break, retest, market push down, retest, market push down. Okay, so it's a pattern that's forming in that area. So just looking at price second and third and fourth, the price is third and fourth, the last candle's market is reading as a double top because it tagged that area twice, and then this will be considered as a double retest. So it's reading as a double top and a double retest just within that area. But if you look at it overall, what do we have? We have that formation of that first, second, third, and we can see price is trying to work its way down. So if price work its way down further, price can tag that blue SR line at 1.03581, which we discovered on a 12-month time frame. But before tagging that, it can head down towards the third to last candle wick. So it can be headed to 1.04645. And we look for that market to break through that orange SR line to work its way down further. If not, then it can reverse. Now, if it reverses, that means the market is respecting the third to last candle of the market, and it can work its way up from a pattern. And we'll talk about that on the monthly time frame. Price action monthly time frame. And what pattern is that? So on the opposite side, what did we receive? We have a pattern here, and we have an overall pattern. So the overall pattern looks much more clear. So we see that first leg, second leg, third leg, fourth leg, double bottom, overall retest. So price second, third, fourth, fifth, sixth, seventh, eighth, last candle of the market is an overall retest. Now, if it respects and works its way up, is respecting the second, third, fourth, fifth, sixth to last candle of the market, which can push that market up if price action doesn't break below that. And a pattern that's being formed at the area of price action is a decline double bottom, just like the previous side that we found that overall double bottom. And we do notice double bottom is a retest of a previous double bottom to left hand side. So we do have that first, second, third, fourth. Price action is a retest if it follows up the bullish green candle, because we don't know how far this market's going to drop and it come back up. If so, market could come from a double bottom and a retest or overall triple bottom. But so far, price action is headed down to the orange line of 1.04645 unless the price action pulls back or we receive a reversal. Price action on the weekly time frame reading as a bearish red candle. So price action candle is a doji. So it's consolidating, trying to break the previous side, which it did, but then went back into it. So you want to see this price action body break this previous side of this candle. That'll be second, third, fourth, fifth, sixth, seventh, eighth, last candle in the market. You want to see the body of the price action break below the eighth candle in the market wick to push that market down. And that means this is where we're looking for the market to identify the break and retest as we walk down the time frame. Daily time frame, price action, bearish red candle sitting right on top of that SR line, so it hasn't broke through yet. Walking down to the 4-hour time frame. So now is identifying a break because in that daily time frame it did break down with wick towards that body, but we want to see a body break through the SR line from the previous time frame. So the body is sitting right on top of the SR line, and the break was the wicks tapping through and coming back to retest. So now we're waiting for a pattern to form here in that area. Okay, guys, this is Cam Jones, FX, AUD, NZD.